I think I'm on. I see something moving over there. Yes, yes, yes. Okay, hold on, let me see. Okay, so the sound is off. That's good. Let me put this up. Okay, I think that's good. Alright, you guys, this is it. This is a oops, sorry, oh, okay. Alright, I think I am on. Okay, hold on 1 second. Alright, let me see. It's so funny. Alright, so I'm looking at Robinhood right now. Obviously, overnight, I don't know what this is going on. If you look at the Robinhood, as of right now, I'm seeing like 10%, 10 cents up above the price right now. But anyway, so it's comical to me, like they have this overnight thing. And again, I don't know how it's legal for them to do, but hey, I digress. Alright guys, so let's get started. I'm not sure how long I'm gonna stay. Really depends on how many interaction I got. If not, of course, I'm gonna be just preaching to the choir here. And so there's no need to. We all know what GameStop is all about. And so, hey, let's update the price real quick here. So currently, the GameStop, kind of like doing these things where it's dancing around this trend line right here. Of course, I drew this again. Like I'm not an expert on anything, not a technical analysis person or anything like that. Now, just a slight chance that it might bounce off of that trend line here. And it's kind of curious too that it just hits right there, right? Again, like if you do the retracement, Fibonacci right here, from the high to from the low to the high right there, you could see that it's kind of approaching the red line right here. If it broke through the red line, what you usually see is that it's going to kind of exceed this immediate low right here. So just look out for that one. Now there's a lot of speculating price action out there, but again, earnings is coming in a week, so perhaps they're trying their best to bring it down as low as they can. Of course, the narrative is still the same. If you look at the news right here, what GameStop stock is giving investor a familiar feelings. But why and all that stuff. And I'm sure, if you read that, this was 6 days ago, though. I just saw a video of, I think, Tony De Niro did a Chapter 11, and he was grouping GameStop with all of those companies that he was saying, they're filing for Chapter, or possibility of filing for Chapter 11. Of course, in that, he was kind of like putting Mullen Automotive and all that stuff. And I'm sure if you know who I'm talking about, Tony De Niro is notorious for pumping AMC, right? Whole AMC for life, but for some reason he's trading GameStop, right? It's like, again, it's the opposite of what you should be doing. But again, hey, I digress. I am a bias in this sense because I do own GameStop. I always say that. Yeah, but anyway, who is this Lost Broken Soul? 911. Hello, who are you? I don't know who you are. Welcome to the chat. How are you? But you seem news to me, so yeah. I hope you're doing well. But thank you for joining. So where do I think the price is gonna go? I don't know. Honestly, I don't know. This is just me, having fun with it. Currently, I do have an accumulating shares since all of this purple line. This is me accumulating shares. Right now, I'm trying to, again, this is my new one that I'm trying to start a position in GameStop. Again, this is my long-term investment portfolio here in my Roth, and so a little bit at a time. But my goal is to max out my Roth IRA for this year, and then before I file for tax for 2024. So I hope that makes sense. But right now I still have $2,500 left. $400 because I just added $100 today. And so I'm waiting for that fund to clear, and then when it clears, I'm gonna be able to put in more, buying more. Hopefully, if it's going down to $12, hey, more shares for me, right? So really depends on how much. And then I have a small account as well, and more, just like $100 in a short on Nvidia for that particular account. I'm hoping that Nvidia will drop a little bit lower before the earnings for GME. So in which case, if I could short it, using that account. Using that just again. Hey, I'm not all in on the short on Nvidia here, of course. But I think I see some weakness in the tipping top. But again, hey, this could go against me tomorrow and just skyrocket to $1,000 a share. Hi Leno, thank you for joining. But so I'm just playing it safe. But of course, my most precision is in GME. So again, this is why I always say that I am biased in this sense. So please do your own due diligence before investing in GameStop right here. Just a quick reminder. Oh, okay. Something is kind of changing a little bit here. Now, if you look back to my old live stream, you would see that this number is actually a little bit lower back then, right? 27.7, and now it's up to 29 cents per share. Okay, what's going on here? Okay, so just a quick reminder, earnings is in March 26, and it seems like they are estimating it to be 30 cents a share now for this quarter. Again, I could have sworn it was 27 or 28 cents per share. So they upped the price. They upped the estimate for GameStop. So that's a good sign, right? Perhaps again thinking that GameStop would never hit that and will kind of pose a miss, quote unquote. But nonetheless, GameStop is going to pose a positive earnings right here. Carter Corner Pocket. Oh no, be more the gambler. Okay, thank you. I appreciate you. You don't know who I am, but you could say that I'm a gambler. Hey, I used to gamble all the time, I guess, in Vegas, right? That's what you seems to know about me, but I appreciate you coming in trolling. Let's see. But anyway, so it seems like they are upping at least 2 cents per share for GameStop right there. So just a quick reminder here, if you do a 2 cents per share, 305 times this. Oops. So that's $91 million $91 million for this particular quarter. Again, this is an estimate. Can we beat that? I don't know. We will see. Perhaps the reason why they increase it 2 cents more. I know that's probably, hold on, let me see, 2 cents more. If I do, yeah, so that's $6 million more than they used to estimate. But again, I don't know how they come up with this estimate here. So maybe they have more data coming over to that. But again, from a company that everybody touting, saying that it's going bankrupt, right? There you go, right? But now all of a sudden you're estimating that GameStop is actually making money. So where is the news? Where is Yahoo Finance apologizing, to Brian Cohen or the leadership that they're doing actually a great job there, right? So again, it's never going to happen because you know why? Last time when GameStop actually posed a very good, performance right here, reported 0 cents per share right there, right? Even though they were expecting GameStop to lose. What happened to Yahoo Finance reporting of this quarter? They misreported it. They reported that GameStop was losing 18 cents per share. 18 cents. Look it up. Don't believe me, right? I'm a gambler, right? Just like that guy was saying. So don't believe me. Just look into it yourself. There's a reason why they don't want to even report this particular, right? This particular quarter, because again, we're coming close to posting positive earnings, and now they're estimating even higher. So $91 million per share, or $91 million this quarter alone. So that's a good thing, right? I'm not saying that, that's a bad thing, but why so high? Perhaps, again, they think that GameStop might not be able to beat that. But I think we could still beat that. We could still beat 30 cents per share. But even if we come out to be 28 cents, 25 cents, just know that, it's going to be reported as missed, right? Hey, I'm just saying, kind of like prepping you ahead of time, just so you know if we're doing a miss on earnings, we're still making money. So $76 million a share, $76 million per quarter. That's still a substantial amount of money. But again, the news is going to be like, oh, we missed earnings, right? And again, this is a concerted effort to kind of not wanting people to pay attention to this stock. And then I'm sure they're going to pump you AMC, they're going to pump you GME coin, those tokens that is on Solana and all that stuff. So just be prepared for that stuff. Again, it's coming next week. Earnings is Tuesday next week. And it's remain to be seen, obviously. Now, if you look at the forecast thereafter, quarter one, again, they're expecting us to lose 5 cents. 5 cents a share. That would come out to be... Now, this is quarter one for next two reporting, okay? So, if you do 5 cents right there... that's $15 million for the first quarter of next year. That's again the estimate, right? So even then, it's the improvement of the estimate for first quarter of last year, right? I hope that makes sense to you. Like even the estimate from Wall Street improve, as time goes on. But again, the news is not going to tell you that GameStop is improving, right? They would much rather just ignore it until it's too late for you to get in already. So I'm trying to, at least elicit some sort of kind of attention to this. Again, hey, I'm biased because I bought into it already. So just do your own due diligence before putting money into this. I am all about spotting trend before the run up, right? This is how you make money in the stock market. If you want to trade, if you want to do a swing trade and all that stuff. I know call option could buy you a whole bunch of or make you a lot of money here. I get that, but that's a contingency on the run itself. Unless you know when the market maker is going to buy a large amount of shares, you're not going to profit, because again, if you do a weekly, even monthly, it's a very, very expensive for you to buy into a call option at this time. If you look at the implied volatility, well, let's look at it together. I don't even know if there's a freaking implied volatility here. But, there's max pain and all that stuff that you need to care about. But there's a safe strategy out there that you could use to, accumulate shares of GameStop, right, at a lower price. And I put it on my title there. It's called the wheel strategy. You could go research it, do the research yourself, what it means to do a wheel strategy, how safe it is, and all that stuff. And so that's a sensible way if you want to collect premium and do all that stuff for yourself. As far as for me, I have many account out there for GameStop that I'm not going to miss out on this run right now. Because again, this is in my opinion, this is an asymmetrical opportunity to accumulate as much as you can in order to succeed in 5-10 years from now. And again, you have to think of it as a long-term investor or investing in this, and there are a long-term strategy for option premium collector people as well. So is it the time? Is this the best time to do a wheel strategy? Well, it's up to you to determine. I think it is, right? So currently I do, like I said, I have, shares of GameStop in my Roth IRA. And then I have an account that I just do the wheel strategy with right now, with my midterm, kind of swing trading account right now. So all of it is involved in GameStop right now. And then also my short term, kind of small call option buying one as well. So again, I'm not gonna miss out on any run at all. I've got the long term covered, I've got the midterm covered, and I got the short term covered as well. Again, it's skewed towards GameStop running. I'm not looking for millions of dollars here, you guys. Okay, I'm only looking for 10x from here in 10 years type thing. So, and if I'm accumulating as much as I can, doing the taxable, tax advantage account, then the gain that I would get from that will not be taxed. So yeah, I'm just, again, doing my own strategy here, and hopefully, you guys think about that as well as time goes on here. Okay, let me read the chat real quick. Ooh, sorry. There we go. Alright, I have 51 shares today. Okay, good, thank you. I'm talking about your NVIDIA put. Oh, okay, got it. Sorry. No, I'm not gambling. I'm not buying puts. So there's an ETF that is an inverse ETF on my Roth IRA account. They kind of provide that, so I'm lucky that I could do that. So again, I'm very small here, like $100 here. But I'm hoping that $100 will turn into $200, and then in which case I'm gonna just X out, right? X out and get more shares of GME. In $200. Hopefully I get more. But again, that's not gonna happen until earnings, I'm sure. I'm accumulating a little bit of a time at a time here, but again, I still have $2,000 to put in to max it out right now, so I'm excited for that. I'm saving up slowly and kind of move the position slowly so that I don't, go all in at 15 or again, I'm trying to see if I could get it at even 12, right? $12. So yeah, I didn't buy put, so I feel like put is more expensive than the inverse ETF. But inverse ETF, you don't get too much percentage in terms of gains, right? So I'd be lucky to double it, right? I'm looking for like even just 15% higher than what I put in. It's still a good number for me. I'm very conservative on my, Roth IRA stuff, with the exception, of course, picking just GameStop on there is very risky already. But I think, I'm high conviction. My high conviction play is in GameStop right now, and I'm not gonna miss out on this opportunity to buy it at this price point right here. So. Michael makes me sick to my stomach. Oh no, what's happening? I don't know what's going on with you guys. Just be respectful. I know, people are hot-headed here. Sometimes it's very easy to be mean and nasty to people when you don't get to see people's faces, right? But I bet you anything, if you don't interact with people, it's like, if you're in person, you would not have said that to people, right? So just again, act as if you are talking to people face to face. Because where is the humanity, right? Why try to be mean to people? And now if you want to kind of make fun of other people because they're, you're disagreeing with them, just make sure that they know you're just joking around, or that's not who you are in person, right? So everybody deserves respect here. So, but anyway, just my rant here. I don't know why I went to that tangent, but yeah, hopefully you guys are good together, or not. Okay, let me. I got sidetracked here. Okay, I was gonna show you this one right here. So currently, this Friday right here, this is when the option expire. It seems like $14.50 is the max paying right there. So again, this is the reason why you don't want to buy into the call option weekly, right? You've heard people losing thousands of dollars because they're trying to time that run, that dopamine high of getting 10x in a week. And this is where you lose the money, is because, again, you could have just buy shares and wait. I know it's not going to be a quick return of like 10x from there, but you could rest in the fact that you have shares of GME and not a call option that could go worthless, right? And so again, like even if you buy a $15 call right here, and if it doesn't hit $15 by Friday, you are not going to see that money, right? Even though you're right on the direction, but it only goes up to $14.50, right? It's still a waste of money, and all of these is going to expire out of the money right now. Market makers are not going to make the same mistake again, and so that's why buying call option is not going to yield you the fruitful, unless you buy it like way in the money here, right? So and when you bought it at too. I bet you anything, even in the money, the implied volatility is going to be so high. I think this one right here, I wonder if they give you implied volatility here. No, they don't say that here. Okay, so here's the reason why the hold on, let me see if I could see this one right here. Okay. So the reason why it would be 1450 is this right here. You see this? If it's above 1450, I bet you anything it's gonna come down like just below that, even 1430, 1440, right? The reason being is that even if 1450 right there, 9,000 contract would be in the money. Wait, hold on. Am I reading this right? Oh, volume, sorry. 4,000 contract would be in the money right there. And if it stays here, 1,000 or close to 2,000 contract would be in the money on the put side, right? So that's why it's going to be resting in between there, right? Because if it goes higher, this would be more depends on, whoever wants to buy into the shares. If the option buyer exercise that call right there, the market maker would have to go to the market to buy 450,000 shares right there by Friday or next Friday, right? Because again, this call needs to be honored, right? And that's why they're not gonna, let it run to $20 by Friday, because $20 is gonna kind of cascade that gamma ram or whatever but again, they've all, like the market makers out there, they learned their lesson already. They're not gonna allow that to even happen. So just a preface, I'm not saying it never going to do that, but again, unless you have trillions of call option here to elicit that. Now, if you look at this one right here in March, this is after earnings already. This could change by next week, because more and more people are going to bet on the weekly option here. So just be aware of that. Max pain might increase dramatically based on how many people are betting that week. So we still have another, I'm sure, come close to earnings, people are gonna there might be a surge of calls, whether it's institutions or somebody, right? But if you look at the amount of volume right there, it's kind of very low. It's kind of suspiciously low, especially when it's like close to earnings, the week of earnings actually. So I wouldn't be surprised to see like a sudden spike of call buying in this particular weeks right here. So this is why the implied volatility for this week is so high. I think it's closer to 180%. 180%. That's really high, right? Just by comparison, it's like Nvidia, if you see a 60% implied volatility, that's considered to be high already. But Gamestop is like 180. So again, this is why buying call option might not be profitable for you, because again, you have to pay for that price. It's like really expensive. Might as well just own shares, buy it and forget it, set it and forget it type thing. Now, if you look at June right here, max pain is 17. Again, this could change at moment's notice. People, could jump in and out of the call, the puts and all that stuff. So just be aware of that. That's that. Okay. Slow and steady always win the race. Yes, I know. Yep. Now let's look at, since we're here right now, Okay, look at this. So 71% being shorted. I mean, nothing to see, nothing to hear here, right? Just business as usual. So millions of shares being shorted every single day. How are they able to do that? I don't know. Honestly, there's non-exempt and then exempt. There are times when it's like 50,000 shares right there, exempt. Does that mean shares that is being created that is not, kosher? Who knows? Who knows? Is it crime? I don't know. Why is it so high? At the face of only what? Every single day, it seems like. The shares only being traded, what? Maybe 3 million shares? So 3.49 million shares being traded today. And it seems like it's just selling volume right here. Again, it's still very low compared to the float. That's only 1% of the float. So at what point do you think it's going to spike up the volume again? Can they contain the volume at this point in time? I don't know. Depends on how many negative sentiment they could create around the stock. If we don't beat the earnings right here, the top line revenue, I bet you anything they're gonna smack it down. So smack it down, like I don't know, 20% down, perhaps. I don't know. I'm just speculating here. I'm always like prepare for the worst, hope for the best type thing. That's how my brain works. But to me, that would be an opportunity right there, right? Because again, even if we missed earnings now, miss means that they're actually making money, because there's no doubt in my mind that we're gonna turn positive this quarter. It's a matter of how much more positive. So it seems like there's concerted effort to overestimate, give GameStop a very high bar so that they're impossible. It's impossible for them to beat. I don't know. Man, if we could beat the expectation, even with the high bar, it's gonna be, oh man, I can't wait to to see what's going on there. Okay, so with the amount of stores too, we might come just below here, and also too, I think people need to realize as well that we are averaging or annualized on the inflationary number, right? Inflation went up. Is it 3% this year, right? Year on year, 3%. So even if, let's see, I think this is the one. So this is the reported one, right? Okay, well, what am I saying? Oh, okay, even right here. So hopefully we would be able to kind of beat that expectation here, or this revenue stream. But again, like we're closing down some stores here, and they seem to do the on trend of GameStop's gonna lose revenue, or the trending down of revenue stream, right? Okay, hold on, let me see. Sorry. Okay, this is revenue. So they're doing a downtrend of, I wonder how many percentage that is. So last reported it was 2.25 right there, and then this one minus. So $200 million less. 0.2. right there, divided by the previous one. So they're assuming that GameStop's going to lose 8% on revenue, right? 8% on revenue. Okay. But accounting for inflation, though, if inflation is only 3% last year, year on year, so that's 5%, say 6% right there. So if we could come ahead of that, this is the estimate plus times or added 3% because the inflation, no, 5%. I'll explain in a minute what I'm doing here. Okay, so if GameStop were to post this, and we're annualizing on the inflationary number, right? And so if we do this, this is the should be the estimate right there. So we might be able to beat that. So even if we're gonna be at that level right there, we're still beating, expectation $100 million on top of that because of the annualized on the inflation number. So again, I don't know how they come up with that, decrease of 8%. Maybe I'm doing it the wrong way. But again, this is just an estimate, right? What we're caring about is the reported one right there on the green or teal, bright green, light green right here. So can we beat them? Of course. I feel like we could beat them easily, the expectation. And again, it's curious to me that they have increasing this by 2 cents per share right there. In my opinion, obviously, I think they overestimate because they want a high bar for GameStop to at least, there's a chance that we might report it as a missed on earnings, right? Yeah. So, but keep in mind too, coming from a company that was thought of as a bankrupt company, and now Wall Street just turns out to be like, oh, just kidding. We're actually estimate that they're gonna make money this quarter right here. So I'm curious what the negative news gonna be after that, because again, like 2 years ago, I remember distinctly all the analysts out there, right, especially Brian Susie, it's like, they can't cut themselves to profitability. Like at some point you're gonna have to do more for the stock. I'm like, of course they can. It's like they're demonstrating right now. So they were able to, turn cash flow positive 4 quarters ago, right? And so what the hell? And then when they could turn cash flow positive, what was it about GameStop? Cash flow positive doesn't matter. What matters is net income. Okay, well, we're about to post positive net income in about a minute or so. What are they gonna say? It's only a couple $1 million. They're not really making any money. A couple million? It's like hundreds of millions of dollars. How about that? And this is just the beginning, obviously, right? We could scale more. We could do more with the, billions of dollars that we have on hands. We could technically post a dividends again. Remember, we used to pay dividends to the tune of 36 cents a share. 10 cents a share is right here before the pandemic. So we could even get to that point as well. So currently we aren't able to do that because the retained earnings is still in the negative. And so hopefully we're gonna get back to that. But even then, even the dividends, people are just gonna reinvest the dividends anyway. So quarterly dividends right here. So we used to pay 10 cents per share. It's right there. Can we go back to that? Sure we can. Maybe 2 years. In 2 years we could do this, or even 2 quarters more. I have no doubt. Okay, so we have dividend for shares. Obviously, it went down from here, and then now it's non-existent. If you do, let me see, quick ratio, inventory. So we used to have a high turnover. Now it's kind of lower. That's probably indicative of the, retail. Not buying, or slow in consumer index, so to speak, because people don't have money. So debt to equity ratio right here, we're higher today. Debt to asset right there. So it used to be 17%, now it's 20%. Long-term debt to total. So 33 cents. Debt to total. Okay, so long-term debt to total. So 13%. It used to be 15%. So the lower the better on this ratio right here. Slowly, of course, right? But again, there's no senior notes for us to worry about here. I think all of this debt means the kind of immediate debt, short-term debt, like that's leases and all that stuff, right? Anything under a year, and we have the money to do that. Asset turnover. I don't know. I'm just like looking at the stat here. Killing some time. Okay, Lionel, Bill, can you compare the stock I told you earlier with GME? Which one? I forgot which one is the. Yep. I need to look at the ticker though, so. I mean, I don't think anything is comparable to GameStop unless it's a different sector altogether. Oh, I don't know what that is. Never heard of that before. IP, this one? Oh, this is a financial group. $100 billion, $30 billion. Okay, they pay 25 cents in dividend. So right off the bat, obviously this is a completely different sector, which is a financial sector. So it's tough to compare GameStop to that, but I could still take a look at this. So what are they doing? So they are the bank holding company. Well, technically GameStop is a holding company, so perhaps, I don't know. We could be as big as this one day in terms of the balance sheets and all that stuff. So we'll see. Key executive. Alright, let's see. So the company offer commercial banking, trust banking, and security products. So that's like stocks, bonds, or some sort of security instruments for you to invest in. Okay. Service to retail, small and medium-sized enterprise customer. So GameStop would be doing business with these people, right? Or so it's technically it's a banking, right? Financial group here. IPO back in 2001. Industry is banks and diversified. Okay, so that's just a gist of it. I did that for myself because I don't know what this company is. Okay. So with that being said, market cap 100 and that's a big market cap right there. Look at the float. Woo! 10 billion shares. So it's really hard to move the share. Well, who knows? Yeah. So yeah, even if you buy one shares right now, you wouldn't. It's just a drop of the bucket here. The float is too large, but for institutions like this, it's kind of like commons now, right? Okay, so let's look at nobody shorting this, which makes sense. There's no Almond Z score. I'm not quite sure what that means. Net income of $4 billion. Okay, that's at least positive. That's good. PE ratio is pretty low. You know, compare it. 10 is considered to be, okay to buy into. So if it's lower than 10, that's pretty good. Book to ratio. So market cap is is higher than shareholder equity right now, which is not the most, bullish thing. But again, like this is a financial instrument, so I don't know how to evaluate that. I have to Google it, like how to evaluate a banking company. So that would be another step you could do. Okay, so we have debt to, that's a lot. So 55 times it's cash flow positive. Debt to equity, you got 6 times debts to equity. Okay, that makes sense. Woo, look at this. Well, okay. Again, this is a banking company, so it's really hard for me to kind of like make sense of this. But I'm looking at the net cash position. At least it's positive, right? So I'm kind of like liking that. Anytime you see net cash position of negative, that might not be a good thing. Okay, so capital expenditure. Okay, so $11 billion in cash flow positive. That's good. At least it's positive. And then profit margin is pretty high too. So far so good. I like that. They're paying less tax. They make billions of dollars, but they pay 3%. There you go. That's just a reference for you to be like, how is this institution able to make so much money and they only have to pay 3% in taxes? And again, this is effective tax rate, right? So after all of the, financial shenanigans that they do, yes, the company get to keep more cash, but again, like this is the unfair nature of, that's why people keep saying own businesses, right? You could write expenses and all that stuff, write it off on your taxes. And yeah, this is how rich people get richer, right? Again, I'm just doing I'm very off topic right now. Okay. So far so good. I like the balance sheets. What I'm not liking is the fact that why is the debt so high? But at the same time, they have cash. They have cash to weather the storm. Okay, so $11 billion free cash flow. That's pretty good. But I don't know why it's being pushed to you. 10 cents. Okay, so let's look at goodwill real quick. So I know that there are hold on. Goodwill. Ooh, what is this? What is that number? Okay, this is billion. This is... What is that number? Okay, hold on. 1,000 billion. Right? Do they actually have like $1 trillion here? Hold on 1 second. All of these numbers here. I think I'm going crazy, you guys. Hold on. Okay, so this is 1 billion. Billion. Okay, so they have $764 billion in cash, which covers, the debt. If they are in trouble, they could do that. Okay, so those are billion. Okay, so let's go back. Okay, this is the raw one, so that's 1 million. Oh my god, that's $4 trillion? Am I tripping, you guys? Okay, so $4 trillion. And this is too much. Hold on. Okay, so this is revenue. Revenue, income. What the F? I really think this is a typo, you guys. It has to be a typo. This is trailing 12. Okay, so that is so weird. Okay. Okay. I don't know how this is. Okay. It's either I'm hallucinating or I don't know how to read these balance sheets. Okay, this is the raw number. Oh, oh, okay, now it makes sense. Duh. Okay, now it makes sense. You're right. I know. Woo, I thought I was hallucinating a little bit. Yes, so it's not in dollar, it's in a Japanese currency. So that's why when you look at this here, it's expressed in dollar, US dollar, right there. But if you go look at the balance sheets, it's expressed in Japanese yen, so to speak. So that's why it's discrepant like that, discrepancy in the way it's being expressed here. But yeah, I mean, so far so good. I mean, cash flow is positive. It's been kind of negative for a little while, but it seems like they're turning it around. Although too, let me double check real quick. I think there's dilution here a little bit. So net income divided by outstanding diluted. Okay, so at least they pay dividends there. I mean, so far so good. I'm not. Again, it's a banking stock here. The only thing I would criticize a little bit here, investing in the bank stock right now, it's because of the sentiment, right? Sentiment right now is that, oh, bank run, bank is collapsing, you know, all of that. So that's the only concern I would have. But yeah, I mean, if you invest only, you know, $100 or even $1,000, I wouldn't sweat it. Like, you know, just know when you are willing to buy into it, are you willing to sell into it, or sell out of the shares if something goes south, right? Go against you, so to speak. Okay, so it looks like there are some goodwill right here. And then, but it's not enough to be scared of investing in this. Looks like there's a lot of shareholder equity here, so it's not in immediate danger, so to speak. But as far as anything, I could see this, you know, serious downturn here. I don't, with the exception of this right here. Very high debt, that could turn south pretty quickly. What if debt become more expensive, longer, higher for longer type thing? So that might be a problem right there. But yeah, I mean, this might be because it's in Japan, or that's why the corporate tax is pretty low. So yeah, I mean, that's just my analysis there. But yeah, thank you though. Appreciate you spotting that. Okay, is there anything else? I think that's all I have, you guys. Seems like I don't have any opposition here, so I'm preaching to the choir. But yeah, just be on the lookout for, you know, negative news out there. I'm sure there's going to be plenty. And of course, you know, the same usual, same old AMC, the same as GME. It's going to run the same, That narrative has been around for a long time, and it will come to play again. I bet you anything. I just saw a video about Michael Screlly or whatever, that pharmaceutical guy, making a video about AMC, how it's the deep value investing and all that stuff. So just be on the lookout for those type of video. And yeah, I mean, GameStop is GameStop. If you don't know what GameStop is by now, that's on you, right? Nobody could help you at this point. All right, thank you, Leno. Appreciate you.